Farm for Profit Podcast. Take a listen, have a blast. Farm for Profit Podcast. Learn about farming while having a laugh. Farm for Profit Podcast.
Well, Corey, it's time for a What's Working in Ag segment. Right now, we want to know what the commodity markets are up to. We got a early start, it feels like, on harvest across the Midwest, and we know a lot of our friends in the South have been going for quite some time. I even got a Snapchat saying Southern Illinois, they're already done with corn harvest.
Really?
Yeah.
Which Illinois goes a ways down there.
It does.
So, yeah.
It does get down there. But we've got a good friend of the podcast here. We got Andrew Kubish.
Yes.
Because it
You got it.
rhymes with rubbish.
Yep.
It's one of those things that if you can introduce yourself that way, you rarely get forgotten.
Are you going to say that every time? I think you've said that every time, Andrew.
I do, because
and
that's
he's a
the way-
regular on now.
That's the way. It's exactly how you described it, wasn't it, Andrew?
That's right. Yeah, memorable.
Remind our listeners who you work for and what your position is.
Lighthouse Commodities, based out of Bismarck, North Dakota. High office out of South Central Nebraska, and then we just help farmers manage grain market risk.
That's right. So we're recording this Friday, September 20th, so right close to the airing date. Give us a once-over. What are the corn and soybean markets?
Hold on. We have to first say, look at that shirt he's got on.
No. I was
And
trying to draw the least amount of attention
We
to
always
it.
give Nebraska crap. We got to give credit where credit is due. 400 starts of in their football stadium sold out today on the 20th. Congratulations, Nebraska. They're having a great season so far, and they have not had that for a while, so good job, guys.
I want my old Corey back. I don't like this
We'll
Corey.
see you when Iowa goes there.
That's right. Well, you got a few games. As long as we're bowl eligible this year, we'll be happy.
You're well on the way. What, you got 3 wins, 4 wins
Yeah,
now?
3 wins.
Yeah, so congratulations on that, and that's enough talk, and that is the most talk about Nebraska positively that we will ever do.
Yeah, the rest of this
I
episode,
appreciate that.
Yeah.
the logo is going to be blurred out on his shirt.
All right. Well, that's probably better talking about that than the market. So let's talk markets.
All right, give us a rundown, Andrew.
Give us a rundown. Well, I mean, I think since we've started chatting on marketing here since even late July or late June, early July, and market's kind of done what we thought. Although I think we've digested this big crop, and maybe the lows aren't quite in yet, but I think the market's showing some decent signs that we're comfortable with crop size today, and now we're on to trading the next thing, South American weather and exports and demand and stuff like that. So, from that perspective, we're in that window of seasonal lows, and if we've weathered it this far, then hopefully better days ahead here.
So we had lows, but we did bounce up off the lows, right? A little bit. We're higher than those now.
Yeah, certainly. Corn. We moved almost 7% off the late August low there, and then soybeans were about 6.5% off that low as well. So I mean, it's certainly nothing to lose sight on. I think for a lot of people, it's the need to start adjusting expectations. I think, as we all know, I think outside of some pockets, it looks like early yield results for corn and beans across a lot of the Midwest are coming in above average. And so I think that's the biggest thing is guys got to start, adjusting and saying, hey, man, I miss my 450 corn, but man, I got 280 corn this year. Well, turns out $4 corn isn't as fun, but now you got those extra bushels to sell, and it starts all adding up again. So I think, that's the same mantra we're dealing with our clients today is, hey, we got some pretty good yields out there, even though prices aren't quite where we hoped they were going to be at some point. We got these extra bushels, break evens drop, and there's still opportunities out there.
So what are you hearing for early yield reports? I know you said better than expected, but we expected better than expected, right?
Yeah, I mean, I know some of our friends in the industry share some yield reports, and it seems like a lot of the Iowa, Illinois, 240 APHs, 260, 280 type corn yields. I think beans, 65, 70 APH, 80, 85 bean yields. like personally, I haven't, share a quick personal anecdote. I actually went out and was looking at some of my dryland corn in central Nebraska. Hasn't had measurable precip on it since mid-August, and corn's thrown true doubles on dry land.
Wow.
18 by 35, 16 by 25 on the secondary year. I mean, that's 170 corn, and I was hoping for 125 on the APH. So I think there's again pockets that'll be, maybe not, more trend line, but it certainly seems the way corn yields are stacking up, we're truly seeing some pretty big yields out there today.
He's going to physically make the markets go down himself just from the show.
I know. we got to put ourselves in perspective, right? Having extra bushels to sell is great. I know that there's a lot of producers that are looking for what could be positive news to send grain markets up. And what we got this week is the Fed cut interest rates, which ultimately should weaken the U.S. dollar, which ultimately should have an effect on commodities eventually, correct?
Yeah, I think you got both the U.S. dollar weakening, and then just, generally, do you start seeing a trend towards a little bit, trying to quash inflation, but now we're going to maybe reintroduce some inflation. And generally, inflation is okay for these commodity markets, and to that point, I think you kind of see some cyclical. Hey, we're going to start putting a few more dollars back into the commodity sector because it's probably going to get a little inflationary, and that spec money is kind of what drives some of these bigger moves and stuff. And you look at the price action in this market in the last 30 days. I mean, even against a bigger yield number last week on the WASD and stuff, and we traded lower briefly, but we're back above 4 pretty quick after the report. Never say never, but I mean, those are pretty good indications the market's priced a good chunk of what this crop size is in, and now it's again looking for that next thing, that's the demand piece, the inflation piece, whatever.
So is there any other areas of news that could potentially come out and have a positive effect on the market?
I mean, you still got to keep a close eye on the South American weather, like all. I mean, the last 5 to 10 years. I mean, that's our competition, and if they start having an issue down there, they've been very dry starting out. But forecasts seem to indicate that they're going to start picking up rain in early October, which would be right around normal seeding time for a good share of their acres. If that transpires, that's off the table. You still have some pent up, what appears to be some fairly significant bean demand going into the Southeast Asian markets through November, December. And then, you got the wild card of the elections coming up. I mean, there could be a lot of pluses or minuses, at least construed from where that goes.
So we're looking at a large crop coming in. That's going to get us a glut of grain that needs to go somewhere that possibly we don't have on-farm storage for. What should we do with that extra grain, and how is the basis going to look going forward?
Yeah, that's a good part, especially for you guys in Iowa and the East. I mean, I think this thing is really going to be, I think you still got old crop in some areas that is still sitting in a bin in some spots. And, to that point, kind of go through your numbers and say, hey, if I'm 265 corn and I got to sell a little off the combine at 380, maybe that isn't the worst thing in the world, and just take the revenue and run with it, stop some interest. And, to the flip side, do not in these markets go start putting grain on basis contracts with no plan. Big carries to March, you're 45, 50 under harvest basis or 30 under whatever, 20-cent carries to March almost. That's 50 under the March, which turns into 70 under the May. And, you'll just never get that back really at all. So that's one big caution, even for the guys that we work on the risk management side. Even if we're going to have big crops, is let's have a plan for that stuff. Don't just start dumping on DP or basis and just forgetting about it, because you're going to just run yourself right into a hole. And I'd rather take the cash in hand and live for another day if we need to. And if it's because of bigger yields, that's not a bad problem to have either. That's a good thing.
So as you think about that, you might have to cut bait on some of your crop this year. But Andrew, are you already working with folks for 2025 crop?
Yeah, and in looking at 25 crop, I mean, we as a group did a round of selling along with the May rally. I mean, there was opportunities out there. You look at the carryout on corn today. 2 billion is a big number, but depending on economics and stuff like that, historically, if you look at analysis, there's a pretty good shot that we'll have a chance for 470 plus corn sometime in the next 6 to 8 months as we move into the spring, summer of next year. So, just have the targets in mind. The farmer is unfortunately probably woefully undersold again for this crop. So there is going to be a lot of selling pressure out there, but know where you want to have a sale. Just be happy with the sale. This isn't the year to necessarily probably get cute with, oh, I think it's 550 or 6, and hey, if it does go there, start selling more of next year's crop and stuff like that. But I think rallies will be fairly limited. The top end, most of these years, like on the stocks use that we see today, I mean, high end is maybe $5 new crop corn in a stocks use environment we're in today. So beans, little concerning with the stocks use, especially if South America comes around on their crop. This high $10 window is kind of the top side of that range. Could be back into 850 type numbers, which that even with record yields is not going to be a lot of fun.
So I got 470 and $5 wrote down. Andrew told us we were going to get to now. I hope.
Yeah, I mean,
sounds bullish.
we do a lot of analytical looks, and I mean, we even we have a quant analyst on staff, and I mean, you never know what things are going to hold, but it's like an 85% chance that you would have a shot at 470 plus corn.
That's
again, not a lot of fun, but it's way better than $3.50 corn too.
So the market almost has to have this huge yield priced in right now then?
Yeah, I think we do. I mean, just the way the market's been reacting. I mean, we may go retest that step low one more time, but I think unless we find one somehow come up with another three bushel an acre nationally or something crazy, we're getting to that point where you run out of seasonality. You found demand sub $4 corn on the export side. It's just the bigger thing to think about is we aren't probably going back to 450 next week. It's we're $4, $4.20 type corn. Mm-hmm. And the other thing too to keep an eye on is selling these big carries. You can go have the opportunity to sell 450 July corn this week on the board. 30 under basis in the local market or better, or zero basis. 450, 430 corn for next. That's for this summer corn. It's not the worst thing in the world. Big markets, big carries, sell the carry, and you're not going to get burnt too badly on that.
Mm-hmm. Any big dates or reports we should be looking forward to, paying attention to?
We really don't have much. I mean, you got some stocks reports here coming up that'll kind of wind up the old crop year, but I mean, probably not a huge game changer on that front. I think it's really just going to be looking, obviously as we move through balance of the late fall WASDE reports, you'll start to see potentially, big crops get bigger mantra. But we'll see if we can offset some of that potential, if there's some potential yield increases with some more demand. And then, of course, you got your January report that's going to be the big dog, so to speak, on kind of wrapping up this whole, this 24 crop size and stuff. But it's really just going to be yield adjustments from here on out from the WASDE side in the next few months, monthly reports.
So we know our listeners are always looking for partners, strategic alliances to be able to help their businesses get better. We appreciate you taking 2024 to share your insights, whether they've been rosy or not so. We're just sharing the facts this season. If they want to work with you or other folks at Lighthouse, how best do they reach out?
Yeah, you can reach out on our website, lighthouscommodities.com, or just give us a ring, 701-516-8025. And, that's easiest way to get a hold of us, one way or the other. And we're glad to chat with guys and see what their needs are in any form or fashion.
Awesome. Well, thanks again for hanging out with us.